This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The White House on Friday pressed the OPEC producer group again to maintain adequate global supply, days after U.S. discussions with some of the world's biggest economies over potentially releasing oil from strategic reserves to quell high energy prices. The Biden administration has asked a wide range of countries, including China for the first time, to consider releasing stocks of crude. President Joe Biden faces slipping approval figures as Americans cite inflation as a growing problem. White House spokeswoman Jen Psaki said the administration wants to ensure that the OPEC member countries and OPEC as an organization meets the demand needs that are out there with the adequate supply. That is something we've pressed him on in the past.
Asian liquefied natural gas, LNG, prices rose for the second straight week on robust demand from Asian buyers ahead of peak winter months and on supply concerns in Europe after delay in licensing the new Nord Stream 2 pipeline. The average LNG price for January delivery into Northeast Asia rose to $36.70 per metric million British thermal units, MMBTU, up $5.20, or 16.5%, from the previous week, industry sources said. The delays to Nord Stream 2 have seen a bit of panic creep back into the market, especially with the first signs of colder temperatures in Asia and with colder forecasts starting to hit in the U.S. as well, said Ryan McKay, commodity strategist at TDS Securities.
Moving on to the top news in the energy sector.
Oil prices fell about 3% to below $80 a barrel on Friday as surging COVID-19 cases in Europe threatened to slow the economic recovery, while investors also weighed a potential release of crude reserves by major economies to cool prices. Brent futures for January fell $2.35, or 2.9%, to settle at $78.89 a barrel. U.S. West Texas Intermediate, WTI, crude for December fell $2.91, or 3.6%, to $76.10 on its last day as the front month. WTI for January, which will soon be the U.S. front month, was down about $2.65, or 3.4%, to $75.78.
Asia's spot crude market has peaked after touching near two-year highs this week, as a possible release of oil reserves from top consumers globally dented sentiment and weighed on prices, trade sources said. The administration of U.S. President Joe Biden asked big oil buyers like China, India and Japan to consider releasing crude stockpiles. China said it is working on a release of its crude reserves, while Japan and South Korea are reviewing the U.S. request. Traders say the possible unprecedented coordinated oil release by top consumers has chilled buying interest in recent sessions, resulting in key physical spot price premiums weakening for crudes sold to Asian buyers out of the Middle East and Russia.
Next, we have the top news in metal markets.
Copper premiums in China have spiked to a record high as an administrative issue over value-added tax, VAT, on imports exacerbates tight supply amid decade-low inventories in the world's biggest consumer of the metal. The premium for physical copper over Shanghai Futures Exchange, SHUSH FE, prices surged to 2,200 yuan, $344, a ton on Friday, data from industry pricing and information provider SMM showed. That is up a massive 80% from a more than 7-year peak the previous day and marks highest daily assessment in records going back to 2012.
Aluminium prices climbed on Friday as an explosion at a smelter in China fueled fears about tighter supplies, while concerns about shortages and low inventories boosted copper prices. Benchmark aluminium on the London Metal Exchange was up 2.5% at $2,682 a ton at 1710 GMT, having earlier touched a session high of $2,697.50. Copper climbed 2.4% to $9,670 a ton. News of the explosion helped aluminium in a knee-jerk reaction, an aluminium trader said, adding that higher aluminium prices would depend on whether the disruption is prolonged and exacerbates shortages. We will now look at the top news in the agricultural sector. Despite good prices, Sales of the next coffee harvest in Brazil have advanced little over the last month. Due to production uncertainties and expectations that prices will move still higher, Safras and Mercado Consultancy said on Friday. Arabica coffee on the ICE Stock Exchange in New York is at its highest level in nearly 10 years, reflecting concerns over supplies affected by adverse weather conditions. Even so, the 2022-23 crop sales of the world's biggest coffee producer and exporter advanced just 1 percentage point in the month to November 12, to 26% of its productive potential, Safras and Mercado said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.